everyone. Welcome back to the Adulting is Easy podcast, where we make adulting easier by making money easier. This is your host, Lauren. And I'm joined today by your friend, Andy. He's been in crypto for over 7 years, is a Bitcoin miner, a content creator on YouTube and Twitter, and he's also a passive income enthusiast. Thanks for joining me, Andy.
Hello. Thank you for having me. I'm excited to chat.
Yeah, it's been a while.
It has.
So, our goal for today is to make adulting easier for listeners by discussing a personal finance topic, since managing money is a big part of adulting. So, today we're going to talk about Bitcoin. But before we dive into Bitcoin specifically, let's take a level up. What is crypto?
Yeah, so I can talk about this several different ways. Bitcoin really is the first cryptocurrency that got the recipe right. But essentially, cryptocurrency broadly is just a digital currency. There's been many attempts over the years to make a digital dollar. And there was things before Bitcoin, but Bitcoin just happened to get the recipe correct to actually get the adoption that we've seen today. But like even the US dollar is technically, it's a digital currency. It's mostly digital. We don't, when we print all these trillions and trillions of dollars that we like to print in this country, those aren't physical dollars. Some of them are, but majority of it is just ones and zeros on a computer screen. So at the core, cryptocurrency is just a digital currency. But what makes it different than like the US dollar or something, it generally speaking, is it's decentralized. So instead of one single entity, one single company, one group of people controlling the entirety of it, usually most cryptocurrencies are spread out where multiple people are contributing, multiple people are running the infrastructure to make the currency function. In the case of Bitcoin, to describe it to the listeners. One, it was originally set out to be a digital currency. It's kind of morphed over time to what people use it as. Some view it as a store of value. Some view it as a hedge against inflation. Others do continue to view it as a digital dollar. We're going to use it to buy our coffees and stuff. Jury's still out on that, so it's still in its infancy. But essentially, the cool thing here with this digital currency is that all of the transactions that have ever happened. So if me, Andy, send you, Lauren, a dollar's worth of Bitcoin, all those transactions like that have happened over the entire history of Bitcoin are all stored publicly across a whole bunch of people spread around the world. This is called blockchain. This is digital ledger technology. The way to think about it, I think that makes it easier, is like it's just a giant Excel spreadsheet that a whole bunch of people keep copies of. And all those copies of the spreadsheet view all the other ones, and they act as a checks and balance. So if we send each other a couple bucks back and forth, that's logged there. All of them log it. But if you decide, no, actually, Andy sent me $1,000, not $1, and then you change your single copy of that spreadsheet, all the other ones will see, oops, that didn't actually happen. That's wrong. So we're going to omit that one from the greater blockchain. And the reason it's called a blockchain is because every time a transaction happens, these transactions are stored in what's called blocks. And you put so I send someone money, they send me money. These transactions are recorded on that section of spreadsheet. It's locked away in a block. Global computational power, computers around the globe say, yes, those are all in that block. It's solved. Let's lock that one in the spreadsheet, log it out there. Let's move on to the next one. So move to the next block in the chain. And it just keeps repeating over and over these groups, these blocks, these batches of transactions that are happening globally. And so Bitcoin makes that blockchain move forward with crypto mining, with Bitcoin mining. And that's essentially the way to think about that is it's just really, really super powerful computers that have one job and one job only, and that is to move that chain forward. And so all these people around the world are throwing all this computational power at this blockchain because every time one of those blocks is solved, then we say, okay, all those transactions, they're legitimate, they're on the chain forever. There's a subsidy. Some Bitcoin gets created, minted out of thin air, and that gets distributed to the people who, the computers that solve that block. So Bitcoin is technically inflationary in that there's more being created every day, but that number is constantly going down. Every 4 years, that number gets smaller. But the important distinction here versus like the US dollar or other fiat currencies around the world where we go, okay, we're gonna send a bunch of money and aid to this country over here for wartime stuff. Oh, we're gonna build a bunch of roads. We're gonna build more nuclear submarines. Take your pick, and they just push a button on a computer and make a bunch of dollars randomly, and a very small amount of people decide that. Bitcoin is programmatic. It's already written out in code. We know exactly what that emission schedule is going to look like. You cannot change it. And so we see the next 100 years of that schedule of emissions and stuff. I can go into detail about any number of those things, but it's a very broad view. But I think the big difference is there's a lot of transparency when it comes to Bitcoin, how it functions, how it operates, who's running it, quote unquote, how it makes more going forward. And then other digital currency technologies like fiat, we don't have much insight into. So that's why there has been a lot of movement towards Bitcoin, but also there is the speculative element, which we can also chat about.
That's good that you made that very simple. And I thank you for that. And as simple as you made it, it still is fairly complicated and
Mhm.
sophisticated sounding. Who came up with this whole thing?
Yeah, so that it's unknown. The person or group of people or what the entity that created Bitcoin originally goes by Satoshi Nakamoto. We really have no clue who this person or individual was. They were very active within the kind of cryptography and what was called the cypherpunk community. These are people who are just on the forefront of technology, trying to do these new things, and these little groups and newsletters and communities chatting. This person went by that moniker. They created Bitcoin. They wrote a white paper to explain how it functions and how it works. They released it to the world. They kept chatting anonymously online a little bit here and there, and then they just poof, vanished. Never to be heard from since then. All the Bitcoin that they actually mined has sat untouched, and most people think that they've either died, they they purposefully removed the password to those, and lost forever. This was part of the grand experiment, but we don't know who it was. All we know is that it caught on, and it's still functioning today. And now entire new groups of people have grown up around this thing and continue to maintain it, mine it, support it.
If Satoshi Nakamoto is alive, how much Bitcoin would this person, people, entity, how much would they have?
The Bitcoin address that is largely agreed upon as Satoshi's has 1 million Bitcoin in it.
Is that
So
like is that like $6 billion? Like how much is that?
60 or 600 billion is some massive amount. Yeah, unfathomable amount of money.
Crazy. And do you, not all cryptocurrencies have this person who, or maybe not, but whoever it is, their leader, their creator is active. Is this the only one? This is the only one that I've heard of where that person's actually anonymous. And how do you think that affects Bitcoin?
Yeah, a lot of the reasons why Bitcoin is so interesting, so valuable, why it's the biggest crypto, why it's the first one to get all the things right, is that unknown original author. It's a lot of the mystery behind it. It did a lot of things first and in the right way. And once that kind of Pandora's box was opened, it's hard to recreate that magic. It's hard to replicate that. Like there have been other cryptos since then that have anonymous teams or anonymous founders, but it's just never been the same. You can't put the magic back in the box, so to speak. There's truth to first mover advantage, both the good side where we see lots of examples over history that's been the one that dominates. We've also seen lots of examples where
Yeah.
it wasn't the first mover, it was the second or third mover that actually was successful. In this case, I think we're 15 years into the Bitcoin experiment, and it's still the dominant one. So I don't think that model has proved untrue for Bitcoin so far. But I just honestly, it's like once you do it uh, a certain way once and it works so well, it's unreplicatable. So you have to take a different approach, essentially.
So you need very powerful computers to be doing the work to log blockchain into the global ledger. I hope all of that made sense.
Hmm.
Is that computing power always going to be available? Is it always going to make financial sense for, are people always going to want to mine it and help log the blockchain and get paid in Bitcoin?
Yeah, so it had very humble beginnings. Once upon a time, with the laptop I'm talking to you on right now, I could have been mining hundreds of Bitcoins per week. If I go back 15 years when it first came out, when it first launched. Of course, now if I were to mine Bitcoin on this laptop, it wouldn't even make pennies over the course of a month. So the
Wow.
once upon a time, it had very humble beginnings that you didn't need a whole lot of computational power to do this. But as it grew, as it gained adoption, as more and more people decided there's something of worth and merit here, so did the global hash rate, the amount of computational power put on the network, became more and more competitive to where now it's like, arms race kind of a thing where it's ultra competitive. So really, the answer is anyone can mine, and if you have an interest in it, you should. But you have to also set your expectations. Um, you know, uh, Today a modern mining machine will cost you anywhere between $2,000 to $5,000. And if you get the higher end one of that for a single machine, $5,000, and you have a very reasonable electric rate, which would be, and this might be mumbo jumbo to a lot of people, but 10 cents per kilowatt hour or less, which is not a lot of people in the country. Most people are north of that. You would be making profit in the neighborhood of like $80 to $150 a month off a $5,000 machine today. Now those numbers get higher as Bitcoin goes higher, but the economics of it really work better at scale, which is why most of the biggest mining powers today are big companies or big entities and stuff. But there is still a really attractive like prospect to doing this whole mining thing. I do it. It's been very profitable to me, but you just have to have a little bit of a longer term mindset. And you have to know a bit about the space so you know when the best times to enter the market are, and also have things like lower electricity costs or find somewhere that does that can you can then have your machines there. That's also another interesting thing for the next couple of years because there are a handful of companies that are working on lower power miners that anybody can run at home that are still actually profitable, even at higher electric rates. So that's a developing field, and I think it's a lot of really exciting stuff happening there. But this exact moment is it's pretty competitive, and you have to definitely have some know-how to kind of jump in.
But the incentive will be there for someone, even if it's big companies, to keep doing this, to keep
It's
running the whatever hashes, doing the work, logging to the
yeah.
blockchain, all that.
Yeah, it's I mean, to give some extra perspective there, we and I did talk about this briefly, which was the reduction of those mining rewards happens every 4 years. It's called the halving. That did just happen 2 weeks ago. But prior to that, this was very profitable. So if you were to buy a bunch of machines, you could expect to earn a yearly ROI of somewhere between 35 to 60%. So you spend $5,000, you will earn 60% on that money each year. That has gone down because the amount of Bitcoin that you mine has been cut in half. But the moment Bitcoin's price starts moving again, which I fully expect to happen later this year or next year, then that margin goes back up and they start being very profitable. So it is an extremely profitable enterprise if you know what you're doing, you get the timing right, you have the right variables. Um, but yeah, it's scary and it's cutthroat, and you again have to have some insight into the space before you get into it because learning curve can be steep and very punishing.
How many rigs do you have?
I run 25, which for any nerds out there who are with us so far, that's 3.55 petahash of hash rate.
Okay, I'll take your word for it. Actually, wait, no, let me calculate. No, I have no idea what that means. So Bitcoin sort of started this cryptocurrency investment, call it that. There's a whole bunch of other ones. Can you talk a little bit about what all these are? What's an altcoin? We're gonna have to bleep this here. What's a coin? What else is going on in this space right now?
Yeah, so Bitcoin is the original one that kind of got the recipe right, that kind of set us on this journey of cryptocurrencies. But there have been literally thousands upon thousands created in the wake of Bitcoin. As of today, I believe on some of the coin aggregator websites that pull all the coin data into one place, so you can see them all listed. There's a neighborhood of 12 to 15,000 other cryptocurrencies out there.
Wow.
Um, And I am someone who is very bullish on Bitcoin. And talk about why that is and stuff, why I believe in it for the long term. Uh, so, uh, but I see opportunities in the other ones. But I will say, as someone who's a crypto enthusiast, but who has, a big bet into Bitcoin, I would say that 99% of this stuff created out there is either a scam, it's just a dream, it's going to fail. There's just not room on this planet for for that many cryptocurrencies.
15,000. That's so
Yeah.
many.
But
Jeez.
some of them, aren't supposed don't want to be digital dollars. They want to be a token used within a gaming ecosystem. There's other use cases, and there's some really interesting experiments happening there. But this is the entire crypto market cap for all cryptos altogether is $2.5 trillion today. Just gold is like $14 trillion. Microsoft, I believe, is bigger
Yeah.
than all of crypto, or at least all of Bitcoin.
Yeah.
So it's very small. It's still very early, and it's largely an experiment. So I encourage anyone, if you're listening to this and you haven't jumped into the world of crypto yet, start with Bitcoin. Learn more about what it is. What I'm saying is interesting. Read some books about it. Watch some videos about it. Start there. Don't dive in head first with the other stuff, because it is, if you look at the Bitcoin chart and it's scary because of how up and down it is, everything else is even worse. Which I see as a benefit as someone who's been in the space for a number of years, and I think of myself as a somewhat savvy investor in the space. But it can be it can absolutely decimate. You can lose all your money so easily. It's really akin to gambling. But I will say I have a positive, optimistic outlook. I think that there will emerge other cryptos that do have legitimate use cases in our world in the future, but it's just so early to know exactly which ones of those are going to be that yet.
So your Bitcoin's number one for you. Is that mostly what you hold, or are you holding other cryptocurrency as well?
Yeah, 40 to 45% of my entire crypto portfolio is Bitcoin. Yep. And then the remaining 55 to 60% is like 40 to 60 positions. But I would say that really it's the majority of that other half is dominated by like 10 to 20 positions. Everything else is just little fractions of things.
What about your overall portfolio? How much of it is crypto?
Um, like 60% or so, my crypto portfolio, maybe almost 70%. I'm very crypto heavy. Lots of people will have a commentary on that, for better or for worse.
So do you have stocks?
I do. Yeah. I have
Okay.
stocks, and we own a home. If if depending on what camp you fall into, whether that should be included in net worth or not. I personally
Sure.
believe anything that you can sell, minus all of the debt you have, equals your net worth. But that, who knows? But yeah. So if of my entire net worth, crypto is about 60 to 70% of that.
Okay. We are guesstimating, say 40% real estate, 40% my husband's firm, maybe 30%, then the rest pretty much stocks. Rounding error of the crypto that we have. Sorry. We lost some money in FTX, like 5 grand. Makes me sad.
Oof. Yeah.
Um, but why does everybody on social media, when I post like what could be a really big win in one of these other areas, why do they keep telling me to like have fun staying poor?
Both the great thing about crypto, and especially like the Bitcoin supporter space, and the terrible thing is they're very passionate. Um, they're very passionate to proclaim the good news, evangelize Orange Coin to everybody, but they get so entrenched in that world that they really do believe that if you don't pay any attention to Bitcoin and you just focus elsewhere with investing, that you're going to be a failure as an investor. It's a very unfortunate. So the whole thing of like have fun staying poor is this kind of jokey, mean thing, but a lot of people say it with a lot of seriousness behind it. That if you're ignoring Bitcoin, well, have fun staying poor because that's the only way to true wealth. And I think that's very unproductive. It's super dumb. If you say it like just out of jest, fine.
Yeah, sure.
But I mean, obviously, Warren Buffett, there's these massive examples in the world of people who are majorly successful investors who think, Bitcoin and cryptocurrency, in the words of Warren Buffett's previous partner who's passed away, Charlie Munger, would call it rat poison. You know, you can obviously have success outside the world of crypto. However, these very passionate, excitable people, I do think if you can strip back some of that awfulness that unfortunately does surface, there is truth in there. And that I believe that we are getting to a place in history with our global economy, especially here in the US, where inflation is rampant. Money printing is just getting worse. The buying power of the dollar is just at rock bottom. It's just been absolutely eroded to where even like S&P 500 index funds, if you look at the true inflation numbers, they aren't even the S&P 500 isn't even beating that. So we're in a really between a rock and a hard place unless something majorly happens with, our monetary policy. You need something that is offers some exponential growth outside of just boring stocks or whatever, or some kind of cash flow, like real estate to balance that. Because in my estimation, the situation is fairly dire. You look at just 3 years ago, how much groceries cost, how much all your day-to-day things cost, and it's just unbelievable how much more expensive it is just 3 years later. What's it going to look like in 3 more years? Because right now the U.S. is printing $1 trillion on average. I think it's every 300 days or something like that. So we're just making more and more money, and all of us who are on the receiving end of that money, who hold that money, our buying power just gets smaller and smaller and smaller. So Bitcoin for me is the hedge against that. It's a very volatile, very experimental hedge against that. But so far in my 7 years of investing in Bitcoin and mining Bitcoin, it has far outperformed everything else. It has been an incredible hedge against inflation, even when considering an 80% drop some years, just when you zoom out. So I understand why they're so excitable, why they say, have fun staying poor. I just wish it came from a better place, a more helpful place, let's help people understand it a bit better, but also from a self-aware place, which is, again, I've said it several times already. It's an experiment. It's an unknown. I have high conviction about this, but there is no guarantee that Bitcoin or anything else, anybody's investing in will work out over the next 1 year, much less 10 years. So I don't know. I just try reasonable reason is lost in the world, and that's what you're getting exposed to. Yeah.
Yeah, the other thing that I hear a lot is I'll be like, "Oh, I have to evict a tenant." They're like, "Bitcoin solves this." I'm like, "How?" They
How?
we all I can't live in a Bitcoin. The tenant can't like that. I don't know. I just don't know. I'm like, they're being mean to me, Andy. That's what I'm saying. They're being mean to me out there
Well,
sometimes.
I am sorry. Yeah, it's like, yeah, Bitcoin does solve a lot of our financial problems if it were to go the direction a lot of us think it will. It is not a silver bullet, though. It is not a cure-all, and I'm sorry they're being mean.
That's why I have you. So what does the future hold for Bitcoin, you think?
Yeah, so this is where it's always it's evolving. Once upon a time, everybody thought it was going to be we spend it at coffee shops, we buy things with it, we spend it like a digital currency, and there will still be that going forward in the future, but that's probably going to take place on technologies that are built on top of Bitcoin. This is where we get into really specific things like layer one, layer two. It's just like software stuff. But really, Bitcoin has a lot of people, the collective who are behind Bitcoin as support seem to see it as a store of value. And in my estimation, my kind of thesis, my bet is that eventually, um, in, nation states, like countries, full-on economies will essentially be forced to utilize Bitcoin as a reserve currency, as a reserve asset. So, in the future, I think it gets big enough. It gets the network gets so large and so unstoppable, so much value gets locked up in it, becomes this unstoppable force that is also uncontrollable by any single country or individual because it's so decentralized, so spread out, that it becomes this very excellent store value vehicle, this very excellent world reserve asset vehicle. And if that happens, well, then we might have other currency and stuff pegged to Bitcoin. We might have banks and payment systems where day-to-day transactions are done in something else, but then every day it's settled in Bitcoin. Bitcoin, the future Bitcoin to me looks like what gold has looked like in the past because Bitcoin basically improves upon everything that all the downsides to gold. Gold's hard to move, is expensive to move. Where do you store the stuff? Like it's, all these things Bitcoin solves by being digital and super hard money, etc. So, the future is unknown. I'm very optimistic about it because I am a believer in progression when it comes to technology. The internet was invented in the 60s, but here we are all these years later, and it's just now like become a full way of our life. Bitcoin's only 15 years old. I really think we have multiple decades ahead of us before we see any meaningful traction on those fronts. So I'm trying to, I think being in now is very early, and that future I think is very bright, but we have quite a long road before we can get there.
Yeah, and you putting into perspective about how much less there is in circulation even versus gold, that says a lot. Like I don't have any gold and like Bitcoin crypto, it's such a small part of the overall economy. Really puts things into perspective. I wanted to ask though, speaking of me losing 5,000, not me, my husband technically, but losing $5,000 in FTX. The idea behind crypto is you kind of it's not anywhere. It's only you have it and you have it physically in this USB looking thing, right? But like is there seems to be a lot of risk there to that because you can lose the physical thing or you can lose the ability to access it. Can you talk a little bit about that?
Yeah, so a feature and a bug is custody of something like Bitcoin. So technically, all your ownership of Bitcoin really just comes down to having a password, effectively. If you want to generate a Bitcoin wallet, if you want to generate an address or an account for you to hold your Bitcoin, uh, you generate what's called a seed phrase or a recovery phrase, and this is just 12 to 24 English words. And that's it. That's the key to your Bitcoin. Now we have devices that help us manage that, help us save that. But these devices we don't actually store the Bitcoins on. The Bitcoins are stored globally across the entire network. They're just online on the network at all times. But to access our account, to withdraw from our account, to send to our account, we need to have this passphrase into it. That's awesome because for the first time ever, you can actually have ownership over something and someone can't take it away from you unless they torture you and you break and you give them those, those words. And that's cool because, there's third world countries, there's wartime countries, there's things like this where, they
Yeah.
literally drain the bank accounts, they take all your physical possessions. But if you put all your money into Bitcoin, you remember 12 words in your head and you walk across a border, you can then on any computer open up any Bitcoin wallet, plug in your 12 words, and all your money comes back to you instantly. You still have it. Now, that's a problem that other countries are faced, and why it's an incredible feature for Bitcoin. Here in the US, we're not in that, hopefully not anytime soon, faced with that kind of a worry. So it becomes a little bit more of a bug because now you have to have people who have to worry about remembering a word or keeping it secure because there's not a bank or an entity, a company keeping it secure for you. And that's an area where I think that a lot of progress needs to be made. There are ways around it. There are companies that can help you manage that and make it easier. Still not perfect yet. If you're really scared of self custody and ownership to that extreme degree, you can get access to Bitcoin through like any of the 10 or 11 Bitcoin ETFs that got approved earlier this year. The downside to that is you don't truly own it. If the government ever decides to do what they did to gold once upon a time and confiscate the gold from your asset from you, they could do that through the ETF. Whereas if you own it yourself, they can't do that. So that is an ongoing challenge of Bitcoin. It's both an incredible asset, an incredible feature that's never been seen before in all of money, but also if you forget your 12 words, your Bitcoin is irrevocably lost forever. Like literally, there's not a single thing that anybody can do to bring that back because cryptocurrency, cryptography, it's ultra encrypted, hard money. The encryption would take to break those words would take all the world's computers millions or billions of years to crack it. It's just really tough encryption. So if you're hearing this and that's scary, good because you need to have a little bit of like fear in you to keep those words very secure, but also know that you don't have to go that route. But also, it's not as bad as it sounds. And if you do good practices with keeping your words and stuff secure in a bank security box or at your home in a vault or whatever, or spread it out. There's ways around that, but yeah, I'm hoping that that's an area over the next 5 to 10 years that we see a lot of progress to make it easier for people.
Yeah, I was asking about that because of the ETFs. You use that feature slash bug of crypto if you are having somebody else hold it for you. So in that case, you're basically getting the store of value out of it. That's the main reason that you would invest in an ETF of Bitcoin or other crypto.
Yeah, and the nice thing is the way that these ETFs were approved and the way they are written, they do actually have to hold Bitcoin one for one with the amount bought. So this is not, I mean,
Hmm.
who knows what's going on behind the scenes, but from a SEC perspective, from a regulation perspective, they have to do that. So it is a nice way to actually get exposure to Bitcoin without holding it, as long as you're okay with all the downsides to that approach. But it's not perfect. It's not actually like perfectly one to one with the price or whatever. But if you do want that store value, or if you want to speculate on what the price will do over the next couple years, but you don't want to go to Coinbase or Binance or some other exchange and try to figure out how to buy Bitcoin actually buying it, then yeah, you can go on Robinhood. You can go to Fidelity. You can go to any one of these brokerages except Vanguard for whatever reason, and you can buy one of these 10 ETFs and get pretty good price exposure to Bitcoin.
How is that logged in the blockchain? When I go
Uh,
buy
s-
that ETF, what happens?
yeah, so it's not, because what they're doing is they are logging that on their end, and
Right.
then right now, largely they're going doing OTC, over the counter buys. So they talk to these big exchanges, big miners, big entities, and they say, we just had this many inflows of ETF. We need to buy X number of Bitcoin. They buy it, they log it. Now, when that Bitcoin changes hands, when it's sold from one person and held by another, that is on chain. That's seen on the network, on the ledger. But the ETF itself isn't actually connected to Bitcoin, aside from through third-party mechanisms that lead their way back.
So you don't have any ETFs,
I do
any
actually,
Bitcoin
yeah.
ETFs. You do?
I do, yeah. So in one of our Roth IRAs, I had a bunch of grayscale BTC, GBTC for a number of years, which has performed very well. But now that these much lower fee ETFs have come out, I've sold all that and I've just put it into, I believe, FBTC, Fidelity's Bitcoin ETF. So I do have a little bit, but no, most of my ownership is actual owned Bitcoin.
Because you know what you're doing.
Some days, yeah.
All right, Andy, is there anything else you want to add before you wrap up?
Um, it's really easy to dismiss Bitcoin as too risky, or an experiment, or it's a scam, or it's going to fail, or whatever. And I would just challenge anybody who's listening to this, who thinks it just immediately goes to the negative on this, because there certainly is possibility for any number of failures, because it is experimental largely. It's only 15 years old. But I'd encourage you, if you're listening to this and any part of it piques your interest, to try to contextualize it a little bit. Again, once upon a time, the internet was not mainstream. It was invented in the 60s. We had it in the 70s, 80s. It started getting a little bit more widespread adoption in the late 80s, and finally in the 90s a little bit more. But that's still minuscule compared to where it is today. So this has been a super, super long, 60 to 80 year journey to get where we are today, where this technology has emerged and become mainstream. Most big technologies, automobiles going away from the horse, these things take lots of time. So if you think that at some point our money system, our economy is going to evolve because of technology, and Bitcoin might be a possibility, if that part of your brain's firing a little bit, you don't have to go out and buy any. You don't have to just listen to me and go do this, but at least investigate it a tiny bit. Just chase that curiosity, because maybe it's satisfied and you're like, it's not, this isn't for me. But maybe you, like me, you go in very skeptical, and then you come out the other side where you're convinced that there's something here. So at the very end of the day, I just encourage anyone who's listening just to be curious, to investigate, and to just spend a little time thinking about it yourself. But other than that, no, that's it. Thanks for having me on the podcast.
Yeah, thanks for being here. Why don't you let people, if they want more Andy, let them know how they can find you.
Yeah, so if you hop on YouTube and type in your friend Andy, you'll find me. And then from there, you can find my Twitter, you can find my podcast, you can find my newsletter, all that good stuff. But that's the hub where I put out content.
Yep. And the last time Andy was on was episode 62, and this is going to be 178. So go back more than 100 episodes ago and you can get the first take of Andy. I'm sure everything he said was 100% completely consistent.
Yeah,
Okay.
I need to go back and listen to that one now, hear what I had to say then.
I know that's what I just thought. Okay. Well, guys, let us know. You can find me on Twitter, X at Adulting is Easy, Instagram Adulting is Easy Real. If you want to see Andy's Bitcoin hat, go to YouTube at Adulting is Easy. Thanks again for listening, everybody. Hopefully, Andy and I have made adulting a little easier for you.